Today I'll be showing you an extremely easy option strategy that you can do to make hundreds of dollars in just a couple days. So for this example, I'll be showing you on Boeing. This is just an example. I would not copy this exact trade. So we'll come over here to Boeing options. So you're going to want to find whichever option that you want to do for this, for your trade. For this example, I'll be showing you on Boeing, obviously. And we're going to be selling calls in this trade. So you're going to want to pick whatever option that you choose, and we're going to come over here to the NASDAQ. And we're going to search the ticker symbol of the stock that you choose. There it is, BA. So we're going to click on Boeing. I'm going to go down here and click on dividend history. So now that we have the dividend history, we can see if there's a dividend date. So the last dividend was in 2020, February of 2020. I'm recording this on August 24th, 2021, so there are no more dividends currently for Boeing, and the ex-dividend date is not available. So we're good on that part. Anytime that you sell options, you want to take note of the dividend date, because if you try to sell options close to a dividend date, there is risk of assignment. So you want to do your research about that, and so that's pretty easy to just look into real quick. It takes about 30 seconds to do, and as we see here, it says ex-dividend date is not available. So there is none. So we're going to come back here. So we're going to go to Boeing. We're going to click on the show chart just to get a guess for this example where we think Boeing might be. We're going to pick our expiration date, August 27th. This is August 24th. I'm filming this, so I'm just going to click the one closest to me. You can choose the one closest to you, or a week or two out, even 3 weeks if you'd like, but the longer you give it out, the more time it has to move. So that can go in your favor or against it. So, but for this example, I'll just show you on August 27th. So let's say in 3 days from now, I think Boeing will be around $222. I think it'll go up a little bit. So what we're going to do is we're going to sell a call right here at the $222.50 strike price. We're actually going to sell two, but we can only click it once right now, so I'll show you how to correct that in a minute. And you're going to buy a call above and below this strike price that we chose. And they have to be equidistant from each other, meaning if I were to go one below the 222.50 strike price, then I would have to go one above the strike price. If I chose two below, right there, with a one gap in between, then I would have to go two above, right there, with a one gap in between. So right there, that'd be wrong because those are right next to each other, but then on the bottom portion, we have a one gap. So for this example, first, I'll show you right here, there's no gaps on either side. And you'll see it should not look like this because we're going to come over here, click this drop down arrow, and click on custom. It's going to go to the one that we're sold, which if you did it in the order that I did, it should be at the top of this list of 3 right here. So we're going to go to the one we sold, highlight that, and switch that to 2. And now you'll see this. This is a butterfly. So this is an iron call butterfly. You can also do this with puts, and it'd be just about the same thing. You just swap it from calls to puts. But right here, we can see our max loss is limited, and that's exactly what we want. And your max profit is about $195. Oh, now it's $197. It's because Boeing, I think it's because, yeah, Boeing's moving currently as I'm recording this, but you can see your max profit is limited. And then there's our, so it has to be between, Boeing has to be between $220.56 and $224.47 for us to be in the green area. And you can see, if you watch right here, you can see how much this profit moves as I move the mouse across. So it's a lot of money just for it to be within a $2 range within 3 days from now, which is it's decently realistic. If I am wrong, I only lose $52. Like right here, it's going to take us about $50 put this into place. Yeah, now the max profit's $200. So now I'll show you what we do if we decide to make it a little bit wider. You might be curious what happens when you scoot it out farther. So now you can lose more, but your profit window opens up a little bit. So now it's $219.29 all the way up to $225.71. So you can see that moved. That's about $6 right here, a little over. If I remember from last time, it was, yeah, so that's about 50 to 100 cents difference. So on each side, so that can be about $2 difference. So it's a wider area to make profit in, and now you make $320 if it's exactly on $222.50. But that is unlikely, but the max profit is way higher. But just the same, the max loss is way more because you have a wider margin, so they have to compensate. And now your profit cuts into your max loss. Now your max loss is way higher. So for this example, we're going to come back here. We're going to set it tighter just so that the max loss is lower. We have max profit right there. So we're going to go over here. We're going to show you on option strat. Click on long call butterfly. Enter the ticker symbol you chose. We chose Boeing, BA. I'm going to choose the exact same expiration date right there. And then all we're going to do is find this little chart up here. We're going to copy this into option strat. So first things first, we'll go from top to bottom. So we sold 2 at $222.50. Right here, the little black 2 shows us $222.50. And we bought one at $225 and bought one at $220. Bought one at $225. There it is. Oh, I flipped it around. And $220. So you can see where the profits have to be on what day for us to make our max profit. So I definitely recommend coming over to option strat to look at all these adjustments, and you can see way better. You see day by day results. This is on Tuesday, Wednesday, Thursday, Friday, and the expiration date, which is Friday again. So as long as it's sitting exactly where we sold our calls at, we'd have the max profit, and you can see where it has to move by what day for the results to happen. This is options trading, so I'd take a look at all the risks behind this. Like risk of assignment, we already covered that part, but there are other risks. I would also learn how to close an option before you put one into place, and there's tons of YouTube videos on how to do that. If you'd like to check out my channel, I show you other option strategies that you can do. If you enjoyed this video, make sure you subscribe for more, and as always, comment any questions you have down below, and I'll be sure to answer all of those. And yeah, thank you for watching.